Welcome to another edition of Technical Talk. Today is Monday, the 22nd of November, and time is now 8:38 GMT. Okay, so taking a lead from Asian equity indexes, which aside from Australia's ASX 200 falling 0.6%, Asia ended positive, which is currently being echoed in early Asia. The London's FTSE is currently up by 0.5%. Germany's DAX is up by 0.2%, and France's CAC is now up by 0.4%, which is this upbeat tone is also seen across US equity index futures right now. As you would expect, upbeat risk sentiment has pulled risk-sensitive currencies higher, including the Australian dollar and New Zealand dollar. As of current recording, the Aussie dollar is up by 0.2%, and the New Zealand dollar is currently now flat. Europe, in terms of Europe's single currency and also Britain's pound, both are largely lower this morning, while the US dollar index, which is a basket of 6 international currencies against the US dollar, is modestly higher by around 1/10 of a percent. Onto the charts, with focus largely being on the euro dollar, Aussie dollar, and pound dollar this morning. So notable movements on the euro dollar, of course, it can be seen on the weekly time frame, which is here. The euro plunged, I think it was 1.4% last week, and registered fresh 2021 troughs against its US counterpart. However, support composed of a 61.8% Fibonacci retracement ratio at 1281 and a 1.618% Fibonacci projection at 1237 is delivering a potential floor this week. Harmonic traders will note that the 1.618% Fibonacci projection also represents what's known as an alternate AB equals CD bullish pattern. So do keep an eye on this lower level this week. Upriver, assuming we get a reaction from this resistance, we'll be looking at the this support. We'll be looking at this resistance area at 1473, 1583. Interestingly, though, trend studies do suggest we are transitioning into a trend to the downside. After taking out the 2nd of November low at, I believe it was 1603. What this suggests to me is we are transitioning to a primary downtrend. Consequently, this questions the value of this support area. Now, onto the daily time frame of the euro dollar. We can also see that we have room to move lower on the daily scale to Quasimodo support at 1213, which kind of confirms or partially validates the downside bias on the weekly scale right now. So in terms of observed levels going forward, weekly support obviously is key between 1237, 1281. However, having noted room to elbow lower on the daily time frame to Quasimodo support at 1213, and the weekly trend clearly facing south. Again, this may see traders question the validity of this support zone. Now, the combination of H1 demand at 1235, H1 chart here at 1235, 1248, and H4 Quasimodo support coming in at 1243 is noteworthy. This short-term zone also welcomes a connection with the weekly time frames support zone. Consequently, a bounce from 1235, 1248 could be in the offing should we test this area. Okay, over to the Aussie US dollar. 3 back-to-back weekly bearish candles, as you can see from the weekly chart, formed from resistance at 75.01. This has landed price on the doorstep of prime support at 69.68, 72.42. Now, do bear in mind, November is down by by nearly 4% as of the current recording. The longer-term trend, however, has been higher since pandemic lows of around 55.06. That's March 2020. As a consequence, dip buyers may try to still come in from this area in attempt to join the current trend and push higher. Now, onto the daily time frame, we can clearly see technicals are attempting to embrace the idea of moves higher from the weekly prime support in the form of a Quasimodo support at 72.20 and a trendline resistance turn support, which is etched from the high 78.91. Now, the trend on this time frame, while we have had a considerable dip in October, is still facing higher, following the break of the 3rd of September high at 74.78. So look, mixing the upper boundary of the weekly timeframes prime support with the Quasimodo support on the daily time frame at 72.20 gives rise to a potential recovery phase occurring this week, technically speaking. So in terms of observed levels on the charts, adding the H1 Quasimodo support at 72.08. This is the H1 time frame here. I don't know why the arrow's moved. That should be there. So look, as I said, adding the Quasimodo support at 72.08 and the round number at 72 to the higher time frame technical areas. Sorry, the daily time frames Quasimodo support at. So let me repeat that. Adding the daily, the H1 time frames Quasimodo support at 72.08 and the round number 72 on the H1 time frame to the Quasimodo support formed on the daily scale at 72.20. Between 72 and 72.20 is an area buyers could welcome on, and that's highlighted by the green zone, which has been enlarged for some reason. Sorry about this. Let me just so this is the support area. So this is the area I have my eye on. I will have my eye on closely this week. As I said, it's a combination of the 72 handle, as you can see on the H1, and the daily Quasimodo support on the from 72.20. So do keep an eye on this area. Should we push lower? Alternatively, if we do come above this prime resistance on the H1 time frame at 72.78, 72.62, do keep an eye on the 73 figure. Now, I would not encourage any short selling from this round number, as round numbers, as most of us will acknowledge, does usually attract some form of whipsaw. Now, with a prime resistance tucked just above that round number at 73.24, 73.09, this area could help facilitate a whipsaw action. What I mean by this is price could snap above the 73 figure into this area and push lower. What this does is takes out all the buy stops, well, the majority of the buy stops above this area, which includes buy stops from traders attempting to fade the round number 73, and also those attempting to jump on the back of a breakout scenario. Okay, finally onto the pound dollar. Now, supply turn demand at 36.29, 34.56. Recently surrendered position. Month to date, November is down nearly 2% for the pound. Couple this with price closing under a double top patterns. The double top pattern comes in at 42.41. Couple this with the price slicing below the double top patterns neckline at 36.69 in August. The weekly chart for me reflects a bearish environment at the moment. The double top pattern's profit objective, which is measured by taking the distance between the highest peak within the double top pattern to the neckline and simply extending this from the breakout point of the below the neckline, gives us a possible downside objective at around 30.93. So do keep an eye on this longer term. Now, onto the daily time frame. Friday's snapping lower, which actually snapped a 3-day bullish phase, has thrown light back on Fibonacci support between 32.62 and 33.37. So do keep an eye on this area this week. Also to the upside, we have resistance at 36.02, again on the daily time frame, and a trend line resistance taken from the high 42.50. Ideally, I would be looking at this area here, but that could be obviously a few weeks before we see that area connect. Where these two areas connect, these two lines connect, is where I'd be looking for a possible reaction. Also, do take note of the RSI. We do commonly see, as you can see on the chart, resistance between 60 and 50, commonly seen within downtrends. As we know on the daily time frame, we are in a downtrend, and as you can see, we have formed resistance between 60 and 50. What this is a temporary overbought base. Usually we are with the overbought area comes in at 70 and above, but given we're in a downtrend and momentum is favored, is primarily to the downside, the overbought has been shifted lower generally between 60 and 40. So do watch price action as and when the value enters this area. So observe technical levels. The weekly time frame, show scope to approach the 131-ish range after closing below the supply turn demand, and obviously kicking below the double top patterns neckline. The daily time frames Fibonacci support, however, as we said, between 32.62, 33.37 is recognized as immediate support. So this could cause problems for any weekly sellers below this area. Room to explore lower on the H4 time frame this week. As you can see, there's very limited resistance according to the charts. Limited support according to the charts. Implies H1 price could continue to move south of the resistances between 34.82 and I believe it's 34.76. And of course, this may zero in on 134. Again, this is the H1 time frame, guys. So look, 134 is actually very interesting because of what's below it. We have a Quasimodo support, two Quasimodo supports actually. The lower one comes in at 33.59 and the higher one at 33.87. Now it's the one at 33.87 that really sparked my interest. Now, it's very common to see price whipsaw through round numbers, as I said earlier. Having H1 Quasimodo support at 33.87 tucked under the big figure suggests this might be a location buyers attempt to fade sell stop flow derived from a break of the 134 figure. So yes, do keep an eye out for this. If we should close above this round number after touching gloves with this Quasimodo support, this could be a potential short-term bullish scenario. Okay, so that's a wrap from this side. Any questions or comments, as usual, send an email to marketanalyst@fpmarkets.com and one of the research team will get back to you. With that, have a wonderful Monday and a productive week ahead, and I'll catch up with you all on Friday.